reshaping the global system. First, a sovereign Bitcoin accumulation race may be already underway. Second, according to Ray Dalio, the post-1945 global order is fracturing into financial power struggles. And third, according to Cathie Wood, AI-driven deflation is about to collide with a debt-based monetary system. At the moment, these are just threads that span across Bitcoin Twitter. Most people are looking at them like they're just talking points, but really, these are more like structural shifts. And if they're converging in the way the data suggests, we are not entering volatility, we're entering redesign, probably by AI.
I think there will be a global arms race for Bitcoin within the next 2 or 3 years. Countries like the United States are establishing strategic Bitcoin reserves. Countries that are aligned with us, like the UAE, are acquiring cryptocurrencies, Bitcoin.
Dan Moorhead, CEO of Pantera Capital, recently said, as you just saw, "I think there will be a global arms race for Bitcoin within the next 2 or 3 years. He mentioned sovereign reserves. He mentioned aligned nations like the UAE accumulating. Now add that to a clip from Jack Dorsey, where he describes Bitcoin as an alternative savings account. It has a 16-year track record. It's volatile short-term, but predictable long-term, because it's math."
I think a lot of companies are doing it. Like you can consider Bitcoin to be an alternative savings account. You can consider it to be like gold, where it's shown a track record over 16 years of just going up. It has its ups and downs, and people say it's volatile, but like if you look at the long range, if you go to your stocks app and you look at all, you see every 4 years it does the same thing, and it just consistently goes up fairly predictably because it's math. And I think companies have understood that, and they're like, this is a hedge against the dollar. I know the dollars I keep in the bank are losing value. So instead of having that, why don't I have Bitcoin that's gaining in value?
Notice something here. Corporations are not buying Bitcoin because they're emotional. They're buying it because they distrust the erosion of fiat. Sovereigns are not considering Bitcoin because it's trendy. They're considering it because fiat brings existential risk. But another giant beam in the structural fire that is fiat is the inevitable deflationary pressures coming our way in a debt-based system that could turn more into scorched earth. Cathie Wood recently made a point that caught many people off guard. She argued that the bigger macro risk ahead isn't inflation, it's deflation, specifically good deflation. Take a look.
With inflation and deflation, one of the things that's interesting to me is I've been talking about, deflation is a bigger risk. I see you tweeting about it. So you're, in spirit, we are locked in this together. What is your read on why deflation is a bigger risk?
So it's a risk and an opportunity. So there's bad deflation and good deflation. If you look at the government measures, they will tell you today we're kind of stuck in this 2 to 3% range. If you look at a more modern indicator, trueflation, I think you feature it as well, Anthony. I don't know if I should call you Pomp or Anthony, but anyway.
Call me a Cathie fanboy.
Oh, you're funny. Thank you. So trueflation is down to 0.8%. And so it too was stuck in that 2 to 3% range. It is resolving to the downside. And I think it's going to go negative. Good deflation is associated with technologically enabled innovation. And, the AI boom is massively deflationary. The AI training costs are dropping 75% per year. AI inference costs, so what it costs when you query ChatGPT or Grok, what it costs to answer that's dropping 85 to, if you believe DeepSeek, 98%.
Technological deflation, falling AI training costs, falling inference costs, mass productivity acceleration. If AI dramatically lowers the cost of producing goods and services, prices fall. We've heard Jeff Booth talk about this more than ChatGPT can count.
So yes, let's go into that.
Yes, Jeff, let's go into it. This is actually good for consumers, but there is a problem that Cathie explains. Our entire monetary system is built on debt. Debt requires nominal growth, which requires an expanding money supply, which leads to inflationary winds. Don't you just love those inflationary winds blowing through your hair? Deflation, even good deflation, tightens leverage. It exposes fragility, and in a high debt system like ours, falling prices increase the real burden of debt. Wait, why is that? Is it because when goods and services cost less, corporate margins are smaller, yet they have to service ever-growing debt obligations? I don't know. And when that happens, historically, central banks print money, moolah. Dollar bills, y'all. Governments step in and political tensions rise. But that's not what's happening right now, though, right? Oh, it is happening right now? Now connect that with the recent 400-page tweet that Ray Dalio dropped on Valentine's Day. In this incredibly long and wildly popular tweet, Dalio covers late-stage empire, high debt, rising wealth gap, technological acceleration, AI, internal pressure, external competition, and a bunch of other buzzwords that would probably end up on your LinkedIn profile. And a wonderful little sign-off signaling the decline of the United States. Happy Valentine's Day. Dalio summarized something he's been studying for decades. He examined the rise and fall of the Dutch Empire and the guilder, the British Empire and the pound, the United States and the dollar, and Chinese dynasties going back to the year 600. What he found wasn't randomness, it was patternness. Empires tend to rise over roughly a 250-year cycle. They rise through education, innovation, productivity, trade dominance, and most importantly, reserve currency status. That prosperity breeds leverage. Leverage breeds. Bubbles burst, money printing follows. Wealth gaps widen, internal conflict rises, external rivalry grows stronger, and eventually, the order breaks. Dalio calls this stage 6. The disorder phase. He recently posted that the post-1945 world order has effectively broken down, not in a dramatic fashion, but structurally. And if that sounds a little bit like the collapse of Rome when armies stopped taking orders from the state, well, I mean, kind of is, Consider this. The World Uncertainty Index just printed 105,000, whatever that means. The highest reading in history? Higher than the global financial crisis, higher than COVID, higher than 9/11. We are not in a calm period. We are in a transition period. And transitions are rarely peaceful. Recently, a clip circulated of IMF and World Bank discussions about global asset registry. The language is striking. Take a look.
We actually have a beautiful opportunity in front of us with the United States being such an unmitigated disaster as it currently is. Okay? So there is the opportunity, and within that opportunity, I would suggest 3 things. The first one, we have to have a global asset registry. We have to know who has the freaking money. And if they don't want you to know that they have the money or how much money they have, chances are they got it from somewhere they shouldn't have gotten it from, and they're spending it on something they shouldn't be spending it from. So number 1, a global asset registry. Number 2, we have to facilitate an international conversation about what is enough. And that if there is a number that is enough, there is a number that is too much. We believe that money becomes power, and when power threatens your democracy, you have to take away power, and the only way to take away that power is by taking away the money. And the only way to take away the money is taxation. So number 3, forget progressivity. All right? Forget progressivity, unless by progressivity you mean taxation that makes people less rich. This is not about a 2% wealth tax when somebody's getting a higher return than that. This is about taxation in order to preserve human freedom, to preserve the...
Yo, that is some... We need to know who has the money? You have the money. The argument was framed around democracy and fairness, but structurally, this is really about visibility. When our systems strain, they increase control. Dalio's work shows that during transition periods, capital controls increase, market restrictions rise, tax regimes harden, asset seizures become politically justifiable. Too much? Who determines who has too much? My guess is that would be probably Sam Altman. Again, not as a conspiracy, this is a pattern. An empire is a body, and when a body declines, it uses every last resource it can to stay alive. And who do you think are the resources, the blood cells of this empire's body? Yes, King, you and me. When trust erodes, visibility expands. Now pause here because this is where things get personal. And speaking of rising uncertainty and systematic fragility, if you're paying attention to how global trust is shifting, it's not unreasonable to ask yourself, how resilient are your own systems? That's where today's sponsor comes in. Sat123.com provides high-quality survival gear designed for real-world resilience, including Faraday bags to protect electronics from EMP shocks or signal interception, satellite phones for off-grid communication, and hardened gear built for uncertain environments. This isn't fear-based consumerism, it's redundancy. And redundancy is rational in transitional periods, like this one. If you want to upgrade your communication and protection systems, head over to sat123.com and use the promo code SIMPLY for 15% off your entire purchase. That's sat123.com, promo code SIMPLY, because resilience isn't paranoia, it's preparation. Now back to the macro picture. While uncertainty spikes and policy discussions intensify, something else is happening quietly. MicroStrategy. Strategy just acquired another 2,486 Bitcoin. Total holdings now exceed 717,000 Bitcoin. Now, why is Michael Saylor buying month after month, quarter after quarter, regardless of the price? Well, probably because neutral reserve assets like Bitcoin become strategic when trust is destroyed. And when Dalio describes reserve currency transitions, he notes, as confidence declines in one system, alternatives rise in another. They're subtle at first, and then they go so fast Samson Mao probably can't keep up in a rocket ship. If this macro convergence is resonating with you, if you're realizing this isn't about price charts but structural shifts, you should seriously consider speaking with professionals who specialize in a long-term Bitcoin strategy. Our partners at thebitcoinway.com are offering a free 30-minute consultation specifically for Beyond Bitcoin viewers. This show. Go to thebitcoinway.com/beyondbitcoin and book yourself a free strategy session. Whether you're thinking about self-custody, treasury, allocation, inheritance planning, or long-term positioning, they're going to walk you through what matters. That's thebitcoinway.com/beyondbitcoin for a free 30-minute consultation. Now let's bring this all together. We have AI-driven deflation, compressing margins and destabilizing debt. Oof. A late-stage reserve currency cycle under strain. Oof. Rising internal wealth tension. External geopolitical fragmentation. Discussions of capital visibility and registry? Record global uncertainty? Oh yeah. Corporate Bitcoin accumulation? Oh yeah. Sovereign reserve positioning? Oh yeah. These are not independent variables, they are converging. And when systems transition, neutral settlement layers become attractive. Not because they promise profit, but because they reduce counterparty exposure. Michael Saylor said it simply to his comment to Ray Dalio, if you believe the world order is breaking down, own the asset with no counterparty. Bitcoin is not an anti-government statement, it's a neutral party protocol. In a world of increasing control, neutrality becomes scarce, and scarcity is what really matters. Play clip.
Bitcoin is a hedge against inflation and deflation because the chaotic part of this is, and it's ripping through the markets now. A lot of traditional industries and companies, being brought, the whole SaaS space, the disaster, as they're calling it. We think there is merit to that particular one, but I think you're going to see disruption all over the place. Because the 5 innovation platforms that I mentioned are going to disrupt the existing world order. And what does that mean? If these technologies are so deflationary, it's going to be tough for the traditional world that's gotten used to sort of the 2 to 3% inflation to adjust. They'll have to embrace some of these technologies faster than expected. So the idea of counterparty risk, I think, is beginning to surface. We've seen it with first brands. We've seen, private equity and private credit, especially, is where there have been a lot of excesses. SaaS, they are too exposed to that. Are we going to see counterparty risk manifest more broadly? If so, Bitcoin doesn't have that problem. And so it is a good hedge against deflation as well as inflation.
Before we close, a quick note. If you want to connect with serious thinkers in the Bitcoin space, like myself, then you need to check out ClubOrange, formerly known as the Orange Pill app. It's now cluborange.org. It's a community built around long-term Bitcoin strategy, macro analysis, and intelligent discussion. Also, we meet for coffee from time to time. You can connect with me directly there at Oceans. That's OSHINS. Again, that's cluborange.org, because navigating transitions requires conversation. We are not witnessing chaos. We are witnessing compression, technological acceleration, monetary strain, geopolitical realignment. In that environment, Bitcoin is not a speculative meme. It is an opt-out system built on math rather than trust. And when trust becomes volatile, math becomes attractive. It's the first time math becomes attractive, when trust becomes volatile. If you found value in this breakdown, make sure you subscribe to the Simply Bitcoin channel. Drop us a like, leave us a comment, tell us what you think. Also, don't forget to hit that notification bell. And if you want to reach out to me directly, I'm on X at RunDanceBitcoin. That's RUNDANC, Dance Bitcoin, BITCOIN. I'm Oceans. This is Beyond Bitcoin. Until next time.